Have you ever gotten advice that carried you through some of the hardest moments, or heard something that you wished you would have known earlier? There is information that comes your way, and you know that it will change your mindset, habits, and eventually your life. Even better if that advice relates to your money. Number 10. You are never too poor to give. This advice challenges your perspective on your money. It keeps you grateful for what you have, and you are able to help someone else with what you have. If the person you are helping is grateful for just $1, you will have more appreciation for money that they can't teach in school. This will also remind you that money is simply a tool, so that you don't base your identity on what your bank account says. Generosity is advice you hear from rich people who have discovered the blessing of giving. Philanthropy, charity drives, and foundations are an investment in themselves. Giving helps you build relationships and be part of something bigger than yourself. Furthermore, you never know when the favor will be returned. No one can predict every event of their life, so there might come a time when you need people to show up for you. However, you should not give with the thought of getting something back when the time comes. Give for the sake of being generous. The feeling generosity gives can't be recreated by anything else. Number 9. Stay organized with financial apps. The world in this generation is mostly digital. Everything is online. School, entertainment, work, and so much more. Therefore, it makes sense to have your money tracker or related financial apps online. This way, you will be able to make amends to them on the go. You will be able to keep track of your shopping list, budget, payments, receipts, investments, and spending wherever you are. There is no risk of forgetting something if you can make changes immediately. Fortunately, there are various apps out there, so you can try them out to find the one that works for you. Some apps will help you get good deals and coupons, like Groupon. You can also keep track of your spending with apps like Money Manager or Spending Tracker. However, if you are the kind of person who prefers to have things in hard copy, then buy and maintain a planner. Make sure to update your documents every so often to have all of your information together. The point is to be organized with your finances, and it doesn't matter what form you use. Number 8. Downsize. Also better known as live below your means. Big and flashy things might be impressive, but they are also money sinkers. Rather than spend plenty of dollars trying to keep up with some image, learn to live below your means. You don't need a big mansion when you are still living by yourself. Rent a studio apartment or move in with friends to cut out cost. You can also downsize your car if it's moving your money out of your account constantly. Think of using public transport if your city provides it. Get a bike or walk to the places if they are nearby. Downsize your closet as well. You don't need to buy clothes every other week. Get clothes made of great quality to last for several years. Downsize your appetite as well. You don't need to eat out whenever you feel like it. Learn to make your favorite foods at home. Cut down on how much you spend on social events as well. Go for events that matter to you. Downsizing is all about learning to say no to short-term pleasure for long-term gains. Number 7. Up your financial education. By now, you know that there are a lot of skills you won't pick up in a classroom. One of those is financial education. Everyone assumes that the school of life will hammer in the lessons you need to know. However, some people have made it easier by writing books, releasing podcasts and audiobooks, and organizing conferences where you can avail this information. There is no excuse for financial ignorance except laziness and disinterest. Therefore, you have to do your best to learn more about money. Learn about debt payment, taxes, and investments. You could also sign up for various financial courses. They don't need to be costly. Find free courses online. Unlike other courses, you can't avoid money, so you need to arm yourself with information. The best way to learn is through experience. It doesn't have to be your experience, nor does it have to be negative. Don't wait for an emergency to learn to save. Don't wait to lose your job to think of diversifying your sources of income. So, you can get yourself a mentor or financial advisor. Make sure that whatever form you pick, you are actually learning something worthwhile on how to manage your money. Number 6. Find ways to increase your income. It is unwise to survive on only one source of income, especially in this economy. There are so many ways to make sure that you have more coming in than what you are spending. You can make passive income, which includes investments like rental properties and stocks. This is income that doesn't require you to work so hard, yet you are still guaranteed some money at the end of it all. You can also make active income, but this will require you to put in some work. This could look like a second job. With the internet, Having a remote job is now easier. You can sign up for freelancing gigs or start your own business. Make sure to play to your hobby or passion so that you get some joy out of the work. Open a bakery or create an Etsy shop. There are so many avenues to monetize the things you enjoy doing. Some sites pay you to read books and review them. Others will pay you for photography. You can also sell the things you have but don't use anymore. This doesn't mean that you should constantly see how to make money from everything you do. You need to have things you do to de-stress without thinking about money. But various sources of income provide a wide net in case of hard times. Number 5. Don't compare your financial status to anyone else. Ever heard the statement, "Comparison is the thief of joy"? Aside from stealing your joy, comparing your financial status will keep you from enjoying what you actually do have. You might not have the latest Tesla, but you made it to your event in your simple car. Take the wins. You have no idea what anyone else is sacrificing or gaining for their financial status. Unfortunately, with social media, it is so easy to judge without the facts. The trip could have been a reward from a competition or contest. They might have gotten into debt to remodel their house. You only fully know about your financial situation, and comparison does not yield anything productive. It just makes you justify your wrong decisions. You don't need to wear the latest clothes or hold the latest phone to be cool, especially if you can't afford it. Be secure in yourself and what you are doing. Can you pay your rent? Do you have money for your groceries? Will you watch your favorite movie when you want to? Learn to be content, especially where money is concerned. Number 4. Keep tabs on your money. You need to keep up with your financial status. Know how much you've got coming in and how much you are spending. Are you spending more than you earn? Are you getting into more debt with each passing day? Are you late on all your payments? These are all questions you need to ask about your money. Unless you have assigned someone to manage your finances, keeping track of your money is your job. Therefore, you need to look at your bank statements and go over your credit report. To keep track of how much you spend, make a budget and stick to it. You can't afford to say yes to every event and every purchase you desire when you are unsure of what's in your account. Money is intimidating, so most people try to avoid it altogether. Out of sight, out of mind should not be something you associate with money. Find out if you are paying more than you should for some services. Review your subscriptions, especially gym and TV subscriptions. Cut out how often you spend on things you could do for yourself, like making your own coffee. Your money, your responsibility. Number 3. Use the 50-30-20 rule. The 50-30-20 rule is a simple guide to help you manage your money spending habits. When you break down the rule, it stands for 50% of your income on necessities, 30% on wants, and 20% on savings. With this rule, you can account for all of your money. It's always advisable to take off your savings because it's easier to cut into them if you've got them on hand. The necessities are your basic needs: food, housing, education, health, and pending payments. Your hairdo is not a necessity, so you don't need to spend hundreds of dollars on it every other week. Your wants can include your entertainment and social aspect. It's important that you don't mistake your wants for necessities. It helps if you list out everything you spend your money on to see what is urgent and what is not. Number 2, pay off your debt and stay out of it. Debt is a tornado for your finances. No matter how small it seems, it will still wreak plenty of havoc on your life. It looks bad on your credit score and damages your self-esteem. Life gets sticky sometimes and you will need some financial help. This might look like a student loan, mortgage, personal loan, car payment, or otherwise. Most car owners have to make car payments of more than $500 that could have gone into their savings. Once you get the loan, have a plan to pay it off as soon as you are able. Interest rates on the loans drive up the overall amount you have to pay in the long run. Try your best not to take out another before you pay off the previous one. The same goes for credit cards. Credit cards are convenient but also make it easier to pile up debt. Pay off your credit cards and then pay for things in cash or go on a shopping ban. You don't need to co-sign for loans either. If you are thinking of taking out a loan, try out a few other options. You might find that you don't really need that car you are eyeing. Before we get into number 1, make sure to check out the links in the description for our best recommendations to boost your savings. Number 1, have a savings plan. Nobody goes into battle without a plan or a strategy. If you have decided to wage a war against poverty, you need a savings plan. Savings are a way to pay yourself for all the work you do. If you are quick to pay other people, you should be sure to pay yourself. This will require some discipline because the first thought people have when it comes to money is what they are going to spend it on. If you have ever been in a tight financial spot, then you know that having savings is a good move. Savings provide a safety net for life's unpredictable events. It also helps if you diversify your savings. Have an emergency fund that is strictly for emergencies. And getting the latest video game or gadget is not an emergency. Have a minimum of $1,000 on that account. Work on your retirement savings as well. Even though retirement seems far off, it might creep up on you as sleep does in the middle of a long movie. Have your regular savings account. If you don't trust yourself to save religiously, automate your savings. Having a plan means that you should have a figure in mind you want to hit and what you hope to spend it on.